Greetings and salutations. What's going on? It's David Duford here at Duford Insurance Group. Welcome to my live Q&A call where you have the questions about anything when it comes to selling and marketing for insurance, no matter what product it is. Thank you for being here. So the purpose of these calls really is to provide an outlet for those of you who are thinking about getting into the business or maybe struggling with the business, that are looking for advice and guidance from somebody who's been doing it for 10 plus years as an agent, as an agency owner, and really anything goes in this. So if you've got questions of any kind, maybe it's about marketing, commissions, agencies, how the business works, concerns, things you've seen, this is pretty much anything that you want to ask me, I'll be happy to ask you or answer. So my recommendation for you is to go ahead and load the chat up with your questions, and as they come, I will answer them. A couple of things here before we get started to give you guys an opportunity to put your questions in the chat. First of all, I've got some new social media going on that I would invite you to consider joining. First of all, I have a new podcast. It's really a podcast where I'm repurposing some old content that's really good. Interviews with top producers. I don't know exactly what the URL link is, but if you put in David Duford Podcast into Google, you'll probably find it. I also have a new shorts channel on YouTube where I just publish shorts on different topics, kind of a more, 50, 60 seconds or less type of topical program design. So if you like the shorter term stuff, you can put into YouTube Duford Insurance Group clips. I do a couple of those published a day, and so if you like more of kind of the bite-sized content that you've come to love and appreciate here, consider joining that channel. Then also I do have an Instagram where I do repurpose some content that is really for my agents only, but I publicly release it again, kind of shorthand content, 60 seconds or less, kind of highlighting some topics and some points that we're making in the sales training. Please consider joining that. The Instagram handle is David _Duford. Put David Duford in. You'll probably find it somewhere. Yes, who needs shorts when you're doing Zoom? Who needs pants or underwear, right? As long as it's kind of like a mullet, party in the front, or business in front, party in the back. All right, excellent. And of course, I will also promote our Elite Agent Summit. If for some reason you could make the Elite Agent Summit tomorrow, I'm going to be up in Nashville. This is a one-day event where we have top producers come in and talk shop about all things insurance, sales, and marketing related. We've got top producers coming in to talk about Medicare, annuities, final expense, ACA. Lots of great people are going to be there. Our next one's going to be in Atlanta, August 26th, and then the final one of the year is going to be in Dallas right before annual election period starts for Medicare, and I believe that's going to be September 23rd, like the third or fourth Friday of the month. So if you can make it, we would love to have you. Go to eliteagentsummit.com to learn more, and then also if you, again, have questions and you're just joining us, good to see you, please consider hitting the like button in order to share this a little bit more, and then also put your questions or comments in the chat, and I will be happy to answer your questions and comments. Let's start with the first one from Mr. Johnny. Your thoughts on family first life? I think family first life is wonderful. One of the things, for the most part, there's always pros and cons to every organization, but on par, I think family first has done a lot of good for the people in our business that need our help. I kind of liken what they've done so far to A.L. Williams' company, Primerica, as it turned out to eventually be in the late 80s. They are I don't know how much growth they're responsible for, but they have brought so many people into this business over the past couple of years, and their growth trajectory has just been a sight to see. So I think on par, they've done more good than harm to the business. And compared to a lot of the other organizations that mass recruit, they have done a lot better than I think the competition has done. For example, we would see mass recruiters that would have these contracts that were just ominous, restrictive. We talked about this yesterday in my live stream. vesting issues where you wouldn't own your book for 2 years, really low commission, constant Kool-Aid fest. Watch the head guy jump around on stage and show off his money and all this nonsense. And Family First Life really hasn't done any of that. I mean, for me, my observation looking from the outside, and I don't do any business with them, is that they've really focused, I think, from their core message on what really I think agents need to hear is a real opportunity, selling insurance, helping people with a great product, insurance, mortgage protection, final expense, and focusing their content not on the flash, but on the success that they have in their system. Again, not everybody's going to be successful with all organizations, and I'm sure there's a fair share of complaints about Family First Life. But I think on par, it's been a better thing for our industry than a bad thing. And it goes to show you just how much production they've done, shows you how untapped this market has been for many years and how it continues to be. So it should be exciting that a business inside of 5+ years has grown to this extent and what you could possibly do as well. Again, are they going to have the best commissions? Are they going to have the best training, the best support? I think that ultimately comes down to who you join, what the track record is behind the organization or the region, I don't know if it's called the regional or the particular sub-agency, I guess you could say, of Family First Life. That's why I always say do your due diligence. In your process of looking for an organization, you got to ask questions like, how do commissions work? What are the pros and cons? Compare it to something else. It's hard to make a sober decision if something's good or bad based off of one observation. That's why you should interview 2 or 3 different agencies. I mean, I tell my agencies or agents who join me to do the same thing, because you're going to make a better choice when you have some exposure to different ways of doing things. There are some people who come in and think one way is the only way and that therefore it's the best way, and it's just not. And many options or many opportunities or cases. So do your due diligence. Make sure that you vet your trainer, the person bringing on, the recruiter, the people responsible for the business. Make sure that they do what they say they're going to do. Talk to people who actually work with that agency in particular, not just some random person. You want to speak with people who've had first hands-on success training other people like you. Again, this is all just like boilerplate stuff that you should be doing anyway. Family First Life or Symmetry, National Agents Alliance, American Income Life, the whole ball of wax. Dave Duford, Duford Insurance Group, right? So if more people would do this, there probably would be a lot less failure in this business. But unfortunately, not everybody's smart like you watching this program. So I do what I can to help those out there. So there you go. All right. On my way to Nashville. Mark, see you tomorrow morning. I'll be there probably about 8:30 at the Top Golf for our event, Lead Agent Summit. What are your thoughts on a brick and mortar, hey Zach, what's up, type of setup rather than buying leads and working them? So just because you've got a brick and mortar, Zach, doesn't mean you've got people who are going to be rushing through the door. For me, the old adage of selling insurance reigns true. This is a business where you've got to sell people. Life insurance is sold, not bought. That's what I was trying to think of. In other words, people just don't, because you have a storefront, bum rush you and hand their checkbooks over to you. That is farcical thinking. Instead, what you have to do is come to them. You have to engage them in their space and reason with them why they should take action today to do business. Some products it's easier to do that with, like health insurance, Medicare, it's a tangible product. Some products it's harder, like life, mortgage protection, final expense. But you still got to show up and close, okay? So to me, storefronts, I've never had a storefront in my entire business as an agent. Really, none of my agents have as a requirement. Some do anyway, and I think it's a waste, but most don't. It doesn't really pan out, I think, to the extent that it could or should. And I think we're working and moving towards a world anyway where more people will be doing business virtually. They don't need to go to a store or a brick and mortar to buy an insurance policy. It's not necessary anymore. We don't even need to go to the grocery store to shop. Food can come to us. So I think we're cultivating a culture of buying that doesn't require a storefront. And that's good for you because that's less operating expense that you have to manage, right? It's better margins for you is the way I'd look at it. Good question. Thank you very much. That'll choke my throat out. Looks silly. Hey, what's up, Anthony? Thanks for being here. Will Luis be at the Dallas event? Yes, I believe he will be. Retired Intel guy. I think he will be. He might not be. Actually, I have to check it with him. He's at all of our events otherwise, but I remember he had to go to Spain or Italy or something for some convention. But I think that's the week after, so I think he should be there. Paula says, hey, Paula, what's up? If an insurance agent lives in a different country, can they still sell products to prospects in the United States? Yes. So you can sell into the States as long as you're a citizen or a resident and you've got a license in a state and have a residence in a state. So if you live abroad part of the year, but you're otherwise residing in the States, you can sell internationally. So what matters is where the client is located, and that's going to be contingent on what non-resident license you have. However, of course, you've got to be an American citizen, have a residence, or have, I think, a U.S. residency. I don't know what the discrepancies are, but you've got to have a residence in the state and have some kind of citizenship in order to do that. There are people who do that, have a lot of fun doing it. I think I talked to a guy once that was with, who am I thinking of? He was in Ireland, and one guy was in the Philippines, and they sold insurance, but they maintain residences here, right? So it definitely is something that works. That's an alien license you have to get, Paula. Well, I don't know about that. Amen, I'm never sober. Kidding. Yeah, so don't listen to John. Thank you, Melissa. Appreciate it. Again, questions. If you guys are popping in, this is an open mic Q&A. You're welcome to throw your questions about anything sales and marketing in the insurance space in the chat. I'll be happy to address them. Pretty much anything goes. Hey, C Dragon, what's up? Thanks for being here. Which carrier pays the fastest? What is the window of payment between term policy versus final expense? So I don't think there's a carrier that pays the fastest. Okay, so are we saying like pays you fastest or pays the family the fastest, like on death claims? I cover both. It's good to cover. First of all, any carrier that says they pay on issue likely means you're going to be paid within the next couple of days of the policy getting approved. If you're paid on first draft, that means the policy has to collect a premium first, then you get paid. That's a slow pay type of setup. There are a lot of carriers. Most of them nowadays pay on issue. Probably 3 out of 4 carriers do. 1 out of 4 pay on draft. But that's subject to you being able to qualify for it. If you have money problems, credit history issues, you might not get paid advance on issue at all. But if you do, then you can. And that's about the fastest as it'll get. Now, as far as the carrier paying faster on claims, it's possibly there are carriers out there that will pay in part or partial of the death benefit without the death certificate. Typically what carriers require is that you have proof of death. I mean, there are people who legitimately try to fake their death in order to collect on a death claim. If you've watched enough forensic files like I have, this is a recurring theme in several of the episodes where people like act as if they're dead. I mean, they dig up bodies and burn them in a car, and and it's like there's dad, and dad comes back and has a different name now, but collects $1 million. It's nice. So you got to have a death certificate because you can con the system as it goes. So typically that takes some time for the county to issue that, and then you send that into the carrier for processing. That takes time. It's usually a couple of weeks. Now, with most funeral homes, since that's what we sell for final expense, they will start the process of setting you up and getting you buried in lieu of getting paid, as long as you assign that payout to the funeral home. They know how to do all this. To me, the payout speed is less of an issue than some carriers make it out to be, because nobody's going to throw you in a fridge for a month if the policy's out of contestability and you're able to assign the policy over to the funeral director. So it's no biggie. The speed at which pay happens is not that much of a difference. It's a gimmick that some try to say, hey, we pay within 24 hours. There have been agencies and carriers who've said that over time, but there's a little asterisk there. And it requires a death certificate. It requires the person to be out of the 2-year contestability, which Nobody pays claims immediately inside of the 2-year contestability unless it's guaranteed issue, because it has to pay. It's guaranteed to pay out return of premium plus interest. So the whole speed of pay on claims is kind of a non-issue for me. It's a gimmick to sell it. It doesn't really matter in reality. And then the difference between pay and term and whole life, it really comes down to the speed in which underwriting is completed. And the more underwriting required, the slower it is to get issued, thus the slower it is for you to get paid. So a fully underwritten term, whole life IUL product, weeks to months, depending on the doctors involved. Is it the VA? Is it just a regular hospital? What kind of medical information is required? Is it a non-medical plan? Maybe that'll take days to weeks. Or is it simplified issued? Maybe it takes a immediate, like a final expense plan. Generally speaking, final expense pays faster than most of the other products out there, equivalent life insurance products like term or fully underwritten, because it's simplified issue. The way underwriting is done is the information is pulled from the Medical Information Bureau. Basically 1984 Big Brother stuff in Braintree, Massachusetts. All of our information on any insurance claims that we've done is filed via our Social Security. All carriers support and sponsor this on some level. It's designed to prevent adverse selection, so carriers look to that to issue a decision on underwriting. It's very real, and it does provide a good service, I think, to issue business quickly, because speed of reviewing of underwriting makes a difference in whether somebody will buy or not. So again, final expense, pretty much quick underwriting, meaning quick pay. The more underwriting required, the slower to pay, generally speaking, is the process. Again, welcome to those of you who have popped on. Consider hitting the like button if you like this kind of Q&A, open mic comments. If you've got questions, if you've got comments, anything at all, throw them in the chat. If you'd like to dialogue, you're welcome to do so. Let's keep moving. I'm struggling in final expense. Would it be better to focus Medicare? So the questions that I would ask this is a tenuous road to go down. Difficulty, adversity is a part of life. You don't go through life without setbacks, struggles, and frustrations. That's part of the human experience. And just because you've had struggle or frustration, Zach, doesn't mean you shouldn't do the thing. The question you must first ask is, am I doing it right? And where can I improve upon? Am I doing enough of what I should be doing? That's a big factor. In other words, are you seeing enough people every week to expose yourself maximally to opportunity? I had an agent once, his name, Wes is his name. And here's one of my first agents. He said, Dave, I'm terrible at final expense. I said, man, what's going on? He said, man, I only closed 2 deals last week. I'm like, well, okay, you closed some sales. That's good. Well, how many presentations you do? 5. It's like, okay, you're almost closing half your presentations. That ain't that bad. And so his problem was he wasn't seeing enough people. And he's gone on now, and he's a RVP for another organization, doing very well, financially successful. But at the time, the thing that I was trying to teach him was the importance of massive action. Like, you can learn another close strategy and rebuttal strategy and, all these little intricacies to fine-tune your presentation. And sure, that matters. But if you're not seeing 15 people a week face-to-face, if you're not talking to and doing complete presentations with 20 people over the phone a week, the odds are stacked against you. Okay, you just don't have the numbers in your favor to see success. So long story short, guys, if you start expressing frustration, which is fine, again, soberly assess, are you doing and upholding your end of the deal? You might be falling short. And the answer, instead of switching products, maybe just to do more of what you should be doing, right? One thing that happens to a lot of agents that get into this business is the shiny object syndrome. It's a very real problem. It's probably more of a problem now than it ever has been, because we have all of these avenues, YouTube, Instagram, whatever, to show us amazing examples of people profoundly and incredibly successful, right? And it's very tempting to change course and do something else when we run up against any frustration, because what most of the so-called gurus do is just talk about how awesome everything is all the time. They never tell you that they had to eat shit for a long time before they had success, or they failed out in their first year of the business, or the stresses that come with. There's not really a level of authenticity with a lot of people who do the kind of content like I do. And it's tempting to think that you've got to change things because you're going through a natural process that everybody does. One example I like to share with, just to contrast this, Randall Baskins, he started American Continental in Nashville, grew up in the 30s or 40s, somewhere in there, and no internet, right? No nothing. The only opportunity he had to sell insurance was from answering a newspaper ad to sell like indemnity policies out in the country. And I I'm jealous of that, envious a little bit, because he didn't have a million different people telling him how great his thing was, how the great thing their thing was versus what he was doing. He was allowed to easily stay focused, or at least had more potential for focus on that one thing, because that's all he had. And I think that's a good thing, that none of us really nowadays, with just the constant vying for your attention online and whatnot, we really get to appreciate. And of course, he went on to create American Continental, Medicare Supplement, focus-driven business, sold off to, I think, Genworth, which then sold off to Aetna, which now is housed out of Brentwood. So I kind of envy that because you're kind of forced to deal with the reality a little more when you can't just go through the escape valve of trying something different because it's less painful. The no pain, no gain, as Arnold said. I think there's some definite truth to that. So again, that doesn't mean you shouldn't change, but before you jump the boat, you should assess, am I doing everything I can? Have I given everything I can to this business in a way to optimally give myself success, opportunity for success? And if you can say that honestly, then it's just not for you, then just change. Yeah, sure. But don't go through the cycle like many agents do. They go from final expense to Medicare to mortgage protection to group sales, and they spend all these years in business and have nothing to show for it because they never learned and experienced pressure and what learning opportunity there was under pressure to perform, frustration, possible doom, defeat. There's something valuable about that you will not get until you experience it, go through it, and arrive on the other side. All right. Ask your questions in the chat. Thank you so much. Hey, Brad, what's going on? Nice to see you, man. What do you think about a Medicare agent trying to sell over the phone? Do you think I would experience less retention? I think that's a possibility. Again, a weak but somewhat accurate analogy was to look at the call centers. Again, call centers in the Medicare space have done a really good job of acquiring clients, but terrible job in retaining them. People bounce on you if you don't take care of them post-sale. So I think what you would bring to the table is the possibility of acquisition is still there. A lot of people bought their plans from the Joe Namath commercials and Montel Williams and all those people. But the real question is, what's the retention going to be like? I think the retention, as long as you put in a system, Brad, to follow up with these people, create clients out of them. Don't think of them. And you started, I think this is the Brad I'm thinking of. You started in Medicare. You didn't have the final expense background of one call close, just get them, close them, go on to the next one. That mentality of just being a hunter doesn't pan well, I think, with Medicare. It's good to get it, but you got to be more of the farmer mentality and keeping what you got. And that means follow up, creating relationships, being intentional in taking care of your clients. And while you'll still get attrition, I think you'll get a lot less of it if you work to take care of your clients. I think it's possible, but it takes a deliberate effort in keeping and maintaining the business that you acquire that way. Do you ever come further south, like Southwest Florida? Hey, Anthony. In our training events, we went to Orlando in January. I think we're going to be in Tampa or Orlando in January 2023. I think we've already booked that event for the Elite Agent Summit there. So yeah, we'll definitely be back south. We want to be down there in January because it's nice as opposed to the rest of the year. It's hot and muggy, but kind of feels pretty good in January in Florida. All right. Hey, Don, what's going on? Hey, Life After Rideshare. I'm starting with FFL next week. What do you think? They're starting me at 120% comp. Make sure you check the commission grids. So the FFL 120 doesn't mean that it's 120 across the board. It means that certain products are 120, Others are lower. You should be able to access a comp grid to see what they exactly are. I know for me personally, like, not all carriers are going to pay the same. Like if an agent starts with me, they're brand new, they're going to be paid between 100 and 110% of the annual premium. It depends on the carriers. Exception is guaranteed issue. That's 60 to 70%. But it just depends on the carrier. So just understand to look a little deeper. A lot of the carriers, I think, sometimes, you want to make sure which carriers you'd be leading with, how much they're going to pay you. Sometimes it's worth taking a little haircut, meaning a lower commission, to have a better product for your client. Again, life after rideshare, do your due diligence, right? And the nice thing in this business is cool is that if you do your due diligence and make sure what you're doing is a good fit, and you find it's not for you, Family First Life releases. I release too, which means you can trade your affiliation from them to any other organization that you want. That's a good thing because that means they back up what they say. If it's not a good fit, they're not going to hold you hostage. It's a great thing in the business that they've always been good about doing. So always, again, you want to look, due diligence. I can't express that enough because one way it's done is not how all ways are done. Tupac. All right. Hey, Tim, do you think mortgage protection leads are becoming... hold on one second. I lost you here. There you are. Do you think mortgage protection leads are becoming harder to get because of fewer refinances? Yeah, so I did a video right at the start of the coronavirus lockdowns, and I told myself I wouldn't do any more like prediction videos because I usually get them wrong. And so I was wrong about this. I got on camera and I said, look, everybody's being locked down. The economy's got to fall apart. They can't paper this thing even further, and I was wrong about that. Get out of mortgage protection because people are going to stop buying houses. They're not going to be able to afford it, right? Well, look at what's happened over the last couple of years. Like, housing prices have been insane with the inflation. But what's going to happen, and any time that you do a business that's connected to real estate, you're going to have cyclical fluctuations, all right? And we really haven't had a massive pullback in the real estate market since, 2008, 2009. It was kind of steady for a couple of years. I think probably started to pick back up in 15 and 16 when Trump was elected. It's been hot for years and years and years. Really, it's just been screaming hot the last couple of years. But the risk that you run is that whenever you're in any business that's connected with a cyclical-based product, is that when, in this case, real estate prices cool down, buying cools down, rates go up, refis slow down, you're not going to have a higher source of leads in those products. And you're likely going to find that business is going to dry up more. And even without that, even when things are hot, the problem with mortgage protection, in my experience, is very hard to get good leads. A good lead for me in mortgage protection is a fresh, exclusive direct mail lead. It is next to impossible to find them because many of the lead territories with carriers or agencies are locked up. They're already serving existing agents. And it's just, you got to take all the scraps, the older leads, the reused, the recycled leads, and that's no fun. So that's kind of why I advocate final expense, Tim, because there's just more people aging every day into senior, the senior ages. The baby boomer population's hitting 65 at the highest levels for the next 10 years. People are ending life or getting to the end of their life with less money than they figured they'd have. Most people don't plan at all to retire. Less people are saving than they used to. These are all positive things for the final expense business because people, it turns out, need life insurance to pay for their final expenses. So I think our business, regardless of what happens, unless it's like civil war and the country shuts down and something seriously bad happens, I think even in bad times, final expense, certainly Medicare, things are going to be a lot more solid than a business like mortgage protection, where it goes hot and then it goes cold. So that's why I've positioned my business at Duford Insurance Group strategically for the next 10 years to predominantly focus on seniors, teaching agents to lead with final expense. It's a simple product to start with, easy to get leads, and then migrating some portion, if not all of their effort over time, usually within a year or two, into Medicare, specifically selling Medicare Advantage plans, which are growing at a lot higher rate than Medicare supplements. Medicare Advantage pays residual income. Final expense pays a higher first-year income. It's like, hand in glove, sword and sheath, made to be together. It's a great pairing of products, and it kind of hits all the high notes we want as agents, right? Good first-year commissions plus passive income earning opportunity. Whereas mortgage protection, and without the risks, or without a higher risk of being affected by market undulations. And again, I can tell you this, Tim, and I'll wrap this up. And if anybody all want me to follow up on this, kind of like the meta level version of all this stuff, I learned the importance of this in my first business when I was selling personal training. I had a pretty good business going for a 23-year-old, and then the market crashed. I lost in 2009 in December like 40% of my clients, and never really retained anything back. And the reason, I think, in part, was because the business of personal training is discretionary. You don't have to have a personal trainer. You can just like buy Tybo tapes and work out at home, right? Or just get a regular gym membership. It's a discretionary purchase. And people with means, back then, if you remember, they pulled back just out of fear. Well, I don't know what to expect, so let's just tighten up a little bit, right? Get rid of the personal training. And so it taught me the importance of being in a business where that impetus, I've got to tighten things up because I don't really need it. I wanted to get out of that. And that's what led me a lot to the final expense business, or an attraction to it, because all the while the Great Recession was going on, final expense grew year over year. You can, like, for example, go look at Lincoln Heritage's production. They used to publish kind of their growth pattern. They were growing like 10, 20% a year for many of those years when Main Street America was struggling just to make ends meet. And I don't see how that's going to change, even with inflationary pressure. People are still going to die. They have to have a policy. They don't have money. A lot of them don't. And people need quality health insurance. That gives them more benefits because that saves money. And that's going to even be more profound going forward. So hopefully I've sold you on our business versus mortgage protection, which is a great product. It helps a lot of people. It's good. But for me personally, it's not the thing that is going to be good when the business dries up. And I don't want to be in that position ever again, because I've been there with personal training. Thank you for the good question. On a fully underwritten product, Melissa says, what advice do you have if the doctor isn't sending records whole life over 6 weeks? Yeah, tough deal. I mean, is it like, how big of a deal is it? What's going on? You could call the doctor directly. You could drop in if it's, within reason, to try to get them to act. Try to get somebody at staff to do something, to move fast on it. But a lot of times you're at their mercy, and that's kind of the tough side of the fully underwritten world. Hey, Matt, thanks for being here. Aubrey, I'm newly licensed and have heard horror stories. Is there a national reputable IMO? Yeah, there's plenty of them. Do your due diligence, like I said. If you're interested to see what we do, davidduford.com/FAQ to learn more. Eileen, hey, medical exam, is there an advantage to setting that up for the client instead of waiting for the carrier? How do we go about taking the responsibility if we want to handle that? Okay, Eileen, if you're in final expense, you probably won't do many medical exams. So if you have any carriers that request that, should you do it yourself or let the carrier do it? Let the carrier do it. I'm not so much in the fully underwritten business, but a lot of guys that are, they want to control the underwriting process. Maybe they have a preferred vendor that they use to conduct those underwriting assessments. They got a relationship with them, right? So regardless, but if you're in the final expense space, you won't do much of it. Bella Michelle, hey, do you know if you have to get another license for Medicare? Does it go? So for Medicare, you need your health insurance license. If you're going to sell Medicare Advantage plans, and you should these days, you also need to get the CMS credential called AHIP. You can get that at ahipmedicaretraining.com. You can take that test at home, and then that's it. Now, I think the state of North Carolina has a senior health insurance or a senior insurance designation unique to that state that you have to take if you're a resident there. Do a Google search to find out more. But beyond that, that's it. And then if you want to sell in the other states, all you got to do is just simply buy the non-resident states. Your test and passing of that test is satisfying for all of the other states. You just have to give the government their money, and then you can sell in those states if you already got a home or resident license. I live in Illinois, and I just took my pre-license courses, so I think that covers the requirements to sell Medicare. Yeah, so just get the AHIP next once you get licensed. Deborah, waiting on my license to arrive. Why would a non-captive agency want the vector contract at moment one. Are these non-chargeback types ICW vector legal? Banking info on file before appointment seems odd. You'll have to clarify a little bit for me, Deborah. I'm a little confused by your question. I'm sorry. I'll just kind of wait for your chat below. All right. Sir Gene. Hey, Sir Gene. Hey, Dave. I do life and Medicare. How much leads do I need to start with to sit with at least 15 to 20 people consistently? Good question. If you're doing direct mail, double that. That's a good place to start. If you're doing Facebook leads, triple it. And this is face-to-face. So if I wanted 15, I'd buy 50 face-to-face leads a week minimum. Telesales, I would probably want 100 leads a week if I were to be full-time to get that much production and get that many presentations. Telesales is a different animal. If you're doing outbound work, you got to have a lot of leads. Again, the best agents selling over the phone, this is final expense, by the way, that do outbound by Facebook leads, at least 100 a week, with inbounds 15 to 20 a week to get the ample exposure to opportunity. Hey, Blessed Mess Farm, how you doing? Are there any live Zoom trainings you mandate to work with you? If so, how many hours a week, month are those trainings? I don't mandate anybody to do anything. I'm pretty laissez-faire. I want you to come to my trainings. I do, right now through the summer, 6 live trainings. 4 of them are 30 minutes long. The other 2 are 2 hours long. If you can't make them live, you can watch the recordings of them. We teach agents to run a business, not to be an employee. So my relationship with you is more of a partnership, coach / mentor than boss, if you will. So I don't ever get mad if somebody doesn't show up to my trainings. I certainly encourage it because there's power in learning live like it is right now. But it is not required to join my agency. So hopefully that makes sense. If you want me to clarify anything about that, let me know. You're welcome, Brad. Argyle, hey, what's up? Or RG, sorry, I'm getting blind. I'm turning 38 in November, and I can't see the screen from 4 feet away from here. I gotta squint looking. Hey, Dave, what's your thoughts on the U.S. health advisors? I hear great things, also hear bad things. Is it I don't really know a ton about U.S. health advisors. Again, here's some general advice. Anytime you don't buy leads, you're probably not going to make a lot of money. You probably don't own your book of business. You probably will have non-competes. And these are all bad things in my book because I look at this business exclusively like you should run it like a business. You want a business where you own your book of business. You'll be paid future commissions. Even if you leave the company, you'll still take those clients with you. You'll still be paid on them, and you can run the business accordingly. And I don't know much about that company to say much with specificity, so do your due diligence. How hard is it to sell 40, hey Gino, 40 life policies by June 30th? So you got 10 a week. You need to do 20 appointments a week face-to-face. If you're new, you probably should run more appointments just to make up for your newness. It's possible. It's tough. I ain't going to say it's easy. But again, you got to sort of kind of look at this like a math equation, okay? If you want that opportunity to do that, you need the odds in your favor. So you got to run a lot of appointments. And that's something plenty of people do because they put that kind of effort in. Run that many appointments. Hey, Jose, what if I'm already with a current IMO, but I also want to sell Medicare? Yeah, you can join our agency to sell Medicare and retain your final expense business elsewhere or any other business. So if you come to us for one particular type of business and you don't want to do the other with us because you got a good relationship, we're completely cool with that. Not a problem. We welcome that. Don't sell off your commission. Sell the best you can offer your client. It'll be hard to replace you. Dave, I need my voice. I said Tupac long ago. You said people thinking death. Okay, gotcha. Thank you, Christian. Appreciate it. Jamie, hey, what's up? Direct mail versus Facebook fax leads. What do you prefer and why? Direct mail all day long. If you're face-to-face, I think I know the direct mail lead is higher quality. Facebook lead has a lower shelf life. People don't remember it or recall it as often. So for a face-to-face environment, if money's not a problem, I want my agents on direct mail. If money is a problem, final expense Facebook leads are great on a face-to-face basis. Just buy more leads for Facebook leads than you would for direct mail. Now telesales, I don't do direct mail over the phone because of the price point. I just rather would do our TV leads instead. We've got a great TV lead provider. They're a little bit more expensive than direct mail, but the leads call you. They're interested. They're calling in off of TV commercials. With direct mail, some of them won't pick up the phone. Some of them aren't going to be hot on buying over the phone. They expected somebody to get something mailed or showed up at their house, so it's a little bit different dynamic. I would just do inbounds if all else was equal financially, in my opinion, if I was Telesales. Let's see, moving on down here. Hey, Time Creator, where do you post your top agents leaderboard? If not, what's the range? I would say top producers are in the 20 to 40,000 range for final expense. On the Medicare side, 60 to 80 applications a month is probably the top side of that. I don't have actually it's one of the projects I'm currently working on is we've never had a leaderboard. It is a frustrating experience trying to track production and centralize it and output it by agent, because there's no central resource that an agency can use to pull those numbers. You have to literally design a formulaic Excel spreadsheet system or program to pull the data or manually input it, then create a bunch of formulas on Excel to then pull that into a central, here's the production outcome for the weeks of X to Y. So I know where my top guys stand, but I can't tell you at any time exactly this agent did that or this based off of production reports. It's actually something we're working on to get, because production leaderboards are one of the best ways to motivate sales teams, and hopefully have one soon. Hey, Jacob, I worked for AIL a few months ago and ended up failing with working there. Took a little break from insurance, but now I'm ready to get back in and try again. I'd love to work with you. Great. Yeah, Jacob, go to davidduford.com/FAQ. Read through how we do business with the different products. If you like what you see, you'll see how to proceed from there. But yeah, I'd love to talk about it. You're welcome, Bella. Hey, Viking, have a job interview with Globe Life Family Heritage. I was wondering if it's a scam or pyramid scheme I should watch out for. It's a legitimate company. Globe Life has been around a long time. Is it so it's not a pyramid scheme, it's not illegal. A lot of people use pyramid scheme like it's not that it's necessarily illegal, but does it have the connotations culturally of an MLM? Do they talk about the cars and the money and the planes and whatever else? Like, there's that kind of cheese ball effect to it. If you see that being promoted more and recruiting being promoted more than actually selling insurance, it's likely you are in an insurance MLM situation. Like what I do, I'm not an MLM. I don't recruit people to recruit people. All I ever talk about in all my content and have for years is how to help you sell more insurance, and then hope you join my agency so you can do it with me, right? That's a different mentality than mass recruiting. So you got to kind of see where their focus is on. And that will kind of lead you to get what that answer is. Hey, David, I live in New York City, and I eventually want to open my own independent agency. Where should I start? No different than kind of what I think. Of course, I'm biased. I'm in final expense, because it's what I learned to start, but it's a great gateway drug into the business. It's a simple product. There's lots of prospects. It's a great way to start. Of course, I love the senior market for all the things I mentioned earlier. It's safety, it's security, it's recession resistance. The opportunity to get leads easily versus other products where it's a lot harder. So I would start there. And you can go to davidduford.com. Up in the menu, there's a free insurance agent resource guide. I've got a lot of blog posts you can read that are just instructive on different aspects of the business, like different products, different markets, things to be worried about, things to be concerned with, right? Opportunities. So that's a good place to start if you're just kind of doing your due diligence. All right. They can try it in. Dave is stepping it up. Yeah, this jacket is burning up. I'm about to take it off. It's hot in here, man. Okay. Aubrey. Hey, Aubrey. Let's see here. Thanks, David. I'm definitely going to look into your agency. Thank you. I just found out about you a few weeks ago and your content's fire. Thank you. Appreciate it, man. Try my best. How would you respond to someone who says they don't have a beneficiary? Excellent question. So what about you got a brother, a sister, a cousin, a loved one, somebody? Usually most people do. If they're not sure about putting it with them, my response is let's just go ahead and start here with them, and we can always change this beneficiary after the fact. A really important note here, guys, is if you ever run into this situation, this is not a reason not to do business today. You can change the beneficiary after the fact. It's revocable. You have to intentionally make it irrevocable. Irrevocable means you can't change it afterwards. It's set in stone. But with these plans, you can change it. So don't let that be an obstacle to closing, because they will go into the witness protection program and you'll never be able to find them again. That's what prospects do when you don't close them on the first call. So come up with some solution. Sometimes with certain carriers and states, you can leave it to the funeral home. And if they're not 100% sure on it, just say, hey, no problem. Let's just get you approved. You know, your health may change. You can change this at any time. And then help them change it later. And usually that's enough to push them over the edge and help them continue to move forward. All right, let's see what else here. Hey, Blessed Mess Farm. Okay, that's great. Thank you for answering that. Some agencies are mandating 8 hours plus non-paid Zoom trainings multiple times a month. Yeah, I don't mandate it. I hope you come. I think my stuff is really good, but I just don't micromanage. I have no interest in doing that. I got into this business because, well, out of desperation, but once I realized the sheer potential of opportunity to make a nice living and have a lifestyle, this is a lifestyle business for me. I do this business so that I can have a life and pursue my other interests besides work, which I love and pretty much is my number one interest in life besides my wife and my family. But truly, it's something that, you know, I have no interest in, you know, calling you every day, asking where you're at, what are you doing, micromanage. I just don't care much, really. So, I mean, I care about you showing up, but I don't want to, when I say I don't care, I don't want to attract an agent that needs all that stuff to go do the job. And that bothers a lot of people. It bothers me if I was in that position. So I kind of run the business how I think, philosophically, and I'm looking for more of the entrepreneurial type. So if you don't want to do the mandated stuff, but you want good training, when you want it, probably good fit. Thank you. U.S. Health Advisor is captive, charge you interest on their advances. Some carriers do that in the final expense space, small amounts of interest. I don't know who does it anymore. A few used to, but that's not unheard of. Hi, David. What's a good starting comp as a new agent? I think brand new, what we do is 100 to 110% for most major carriers. For final expense guaranteed issue, it's 60 to 70. I think that's fair. After you write 50 policies as new agent with us, we'll move you up to 110 to 120. Guaranteed issue is 70 to 80. There are residuals, 3 to 8% years 2 through 10. I think somewhere in that range where I started is fine. Maybe some circumstances where a little bit less is good. But part of this, Orlando, is going to come down to what do you get for your commission? Is a 70% commission bad if you're getting free quality leads? No. You don't have to pay for leads, so you don't have costs doing business, and you just make straight cash. That's pretty good. Is 70% good when you got to buy leads and spend $500, $600, $700 a week? No. So that's kind of going to depend on the other variables too. Mo money, mo problems. Saint, who said that? Which saint said that? Saint Puff Daddy. That's right. That's right, John. Are you better off running your own direct mail or buying the direct mail leads? Yeah, hey, John, what's going on? We just teach you to go buy them. Let the lead houses who have the skill set and the expertise to print and manage the lead flow do it. You certainly could go out there and buy your own lead press and printer and operate it and do all that stuff and experience wholesale prices. But there's consequences to that. It takes time. What if the thing breaks? It takes massive capital investment. Where are you going to put it in your house, your basement? What if you don't have room, right? The easy way is just to let the good trusted people do it. And what you need to focus your time on, Joe, is learning how to sell effectively, getting in front of prospects, closing them consistently. That is the secret to this business. And if you can do that, even if you got to pay a higher fee to the companies that do the service for you, as long as the ROI ratio is there, then what do you got to worry about? You just scale up your activity to make even more money. Good question, though. Zach says, how do I know if being a salesman isn't for me? I struggle with using rebuttals because I feel like a pest. When do you know the fine line between throwing in the towel and knowing the business isn't for you? In short, Zach, I would just say follow my script or follow the script. You don't know. A lot of the times new agents think they know more than they do, but they know less than they do. And you have to humble yourself and have humility and just do what you're taught, which means you've got to push when it's uncomfortable. And what I have found being in this position is that much of the basics that I was taught early on that I avoided for the same reasons as you did, as I've progressed through my career, I realized it was all right. Why people object, why people push back. Sometimes there's resistance and you've got to push through it. Also, what are you not doing in your presentation? Look at these opportunities like, okay, where am I missing something? Maybe I'm not doing a good job pre-qualifying. Maybe I'm not doing a good job of building authority and trust and presenting, right? Connecting with the client. So look to those as opportunities for improvement too. Again, all agents are pests when they start, but the goal is to turn into a welcome guest. But even though 3 out of 4, even though you're in the home, half the time you're going to be a pest, all right? Even if you do everything right. And if you do that half the time, you're probably wildly successful. If you can close half your presentations, meaning you're a welcome guest the other half, the profit from those sales far outweigh the cost of being a pest. Does that make sense, Zach? So there's a paradox in the insurance sales business and sales in general, is that the most successful people always hear no more than they hear yes. I repeat, you as a successful agent are still going to hear no a lot more than you hear yes. But the paradox is you still can see massive success financially because the output of the success is much higher and more lucrative than the small cost of doing business when they say no. So understand it's kind of a dynamic of the business to always feel like constantly being, rejected. It's quite normal. The agency wants a vector agreement signed at the time of application, but I have no business in chargebacks yet. This question is related to your contract clause yesterday. Okay. I'd have to see what the vector agreement says. I don't know what the stipulation is, Deborah. If you don't pay your chargebacks, they're going to refer you to vector, right? So if you hit vector, then you basically eliminate your opportunities for contracting with other carriers and getting advances until that vector is paid. So I don't know what they're requiring you to sign. Most carriers have this associated with it, is that if you don't pay, you get reported to this. So maybe that's like just made more clearer in the contract that this is what happens when you don't pay. You're going to be sent to a reporting agency. And that is okay. All the vector does is serve as a clearinghouse to know who and what agents honor their debts and the ones that don't. So if that's all that is, that's normal. I don't see anything wrong with that. Hey Trevor, what's up? Thanks for being here. Just started with your agency a couple of days ago. Should I go ahead and buy leads while I'm training so I get them in the time I'm done training? Yeah, Trevor, good question. So if you're doing, it depends. If you're doing Facebook leads, wait a couple of days, like 3 to 5 days before you buy them, okay, but when you intend to sell. So if you're going to sell like June 15th, I wouldn't buy them today. I'd buy them June 10th. If you're going to do direct mail, get an order in ASAP. Those leads take 20 to 25 days to start coming back. You want to lead in sooner than later, okay, or lead order in sooner than later. Live transfers are probably a couple of days to a week to get started. So again, time that to when you intend to start working. The worst thing you can do, especially with Facebook leads, is start a lead order and then let your leads sit there for a while. They get old fast. Other people will call, not them directly, but they'll go on and request other information off of Facebook because they're retargeted by vendors. So you got to move fast on Facebook leads if you're going to go with that. So time them when you start. I just got you on permanent quiet, John. I don't even hear my phone ding when you text me or see a notification. What kind of training and leads do you provide? The best thing I could describe to you is go to davidduford.com/FAQ. We do a ton of live training a week. We've got a ton of script training development, self-study material, product training for final expense, Medicare annuities, ACA. If you go to davidduford.com/FAQ, you'll see some more videos and content that will explain that further. You can even go into YouTube and put in David Duford training or Duford Insurance Group training, and you'll see a video I've done on about it too. And I actually walk you through the site, show you what it is, how it works, that kind of thing. What kind of training? Okay, just did that one. Can we just love each other? Hey, what's up? I need help. I had to relocate, rent's not paid this month, and all the leads are aged. What can I do? I don't drive. Tough spot, man. You might need to just wait until you get back on your feet. If you can't go see these people because you can't drive, you could call them and try to sell them, but you might be better off to kind of just recalibrate, get back on your feet, and then do this business when you have financially things in your favor. Again, not trying to be mean, just we want the best outcome, right? What we don't want to do is treat this business like a Hail Mary, like everything else is failing, let me just do this, right? This is a serious business, and you want to make sure all the odds are in your favor. And one of those things is the type of leads, the money to invest in those leads, that kind of thing. I saw on the school website that someone said Forrester's new agents have to send a paper app before they can do an e-app. So Matt, my understanding was, and maybe somebody in the chat here knows, feel free to post it if you do, that with Forrester's you're required to do a paper app in person all the time, even after the first one. But I may be mistaken. So if somebody in the chat knows this, or put it in the comments if you're watching recording, or put it in the chat if you're watching this live. What's a good way to track expenses, i.e. bookkeeper? Yeah, you could hire a bookkeeper locally. Certainly put all your business expenses and income in one account. Reconcile it monthly. Use QuickBooks. That's probably the easiest way. Let your bookkeeper reconcile that so you can track your profit and loss statements, see where your money's coming from, that kind of thing. That's what I do with my business. Works just fine. I need my voice because you're so behind with what I say. Yeah, I know. That's okay. You need to cut me off. I know. This is like relief for me personally. It's kind of sad though. It's like what, John's not interrupting me every 30 seconds. John's on our training. He serves as my proverbial dog to kick. And he can't talk right now. He's very upset about it. So it's too bad. Hey, Jacob, when you say you sell over the phone, is it an over the phone call or do you run a presentation over Zoom? Hey, Jacob, thanks for the good question. Yeah, so in Final Expense, we actually physically pick the phone up and call, or we use a dialer or something. We'd never do Zoom. If you can think of Mildred, the meme, the grandma meme, she's looking at the computer with her glasses and she's in like a muumuu and she's like, what? Like that's our average Final Expense client. Having them being able to competently access anything online, with all due respect, is about half the time, if not more, is not going to happen. And so, long story short, if you force them to do Zoom, you'll lose money. But they know how to talk on the phone for the most part. So you want to use carriers that can do the whole thing over the phone, sight unseen, without Zoom capability and without electronic signature. You can sign verbally on a recorded line. So that's what we predominantly use in Final Expense. This isn't the case necessarily in mortgage protection. There's a lot of Zoom done there because the audience, the clientele are younger, a little more technologically capable. Yeah, you're welcome, Deborah. Appreciate it. Just got my life license. Any company recommendations and tip? Money Man, David Duford. Duford Insurance Group. DavidDuford.com/FAQ. That's me. If you actually go up to the insurance, the free agent insurance guide or whatever it is, in the top of the menu, you see it. There's a bunch of reviews I did on other agencies. You can check that out too. That might be useful. There's some YouTube videos for telesales age leads. Yep. I've never done face-to-face. I sell in other states. I'm licensed in many states. I'll request it by phone, TV, commercial. Cool. Just got my life and annuity license. Any recommendations for a company? Just answered that. Last call for questions, kind of wrapping it up now here at the end of the hour. I'm 21. Hey, Garrett. Started selling life and accident to small business owners for employees when I was 19. Cool. Awesome. I'm now in an agency selling life and health over the phone to warm leads. What would be next? I don't know. Lots of options, right? Run your own business, buy your own leads would be a step up, I think, if you're doing well. Looking to sell. I mean, for us, our business model, and there's lots of different ways to do this business, right? Like there's not a what's next, like always the best. Our focus is in more one-call closed businesses on a mass market basis. We're not targeting the white-collar type of clientele, the attorneys, the this and the that. We're looking for Joe Average American, right? Worked on a line, retired, not rich, maybe a little savings, probably not though. There's a lot of those prospects, millions upon millions, and every day there are more and more aging into that range. So for us, that's our greatest market. That's what's next for us. So to target those, we use Final Expense and Medicare, just because it's a mass market appeal. But you can make a great name for yourself and make good money just selling to the working class. There's a guy, John Savage, that I think said that, eat with the classes, sell to the masses. There's nothing wrong at all with just selling normal average people, the middle markets, as they say. There's a huge demand for it. Is it worth having a separate account for chargebacks? I know I did when I was in high-ticket travel sales. For me, Aubrey, for chargebacks, I had this conversation the other day in our training. I never had one as a personal producer because I always was writing business. If you do a good job of selling, you're not a high-pressure salesperson, you're writing good carriers, and you're consistently writing every week, you shouldn't have a lot of lapses. And the new business that comes in every week should easily cover those lapses. So all is to say, if you just write business weekly, as you should be fine. But again, if you're more conservative financially, then yeah, set up a side account, put 10% of your money in there, 15% if you're super cautious, and just have that to the side and use that when necessary. But otherwise, for me, it was never really like a major issue. I felt like what I wrote was easily covering the demands of the chargebacks when they came in. Well, ladies and gentlemen, it is 5 o'clock. I hope you enjoyed this Q&A call. We'll be back live next week with some more content. And again, if you're looking for an agency to join to sell final expense, Medicare, annuities, or ACA, go to davidduford.com/FAQ. And thank you so much for your time. I appreciate it. We'll see you next time. Bye.